Good morning, traders, and welcome to BCR's morning market outlook. First up, let's have a look at the US dollar. The DXY slipped back below 98 on Wednesday, ending a three-day rally as optimism around a possible US-Iran agreement reduced the safe haven demand for the US dollar. Markets are also now turning attention towards Friday's US jobs report, while easing oil prices have also reduced some inflation concerns and expectations of a further Fed rate hike. Um, Technically, the index still remains trapped in a broad range below the 100-day and 200-day moving averages at 98.47 and 98.55. Resistance sits at 98.55 and 98.88, while support is seen around the psychological level of 98. Momentum remains quite weak despite signs of a short-term MACD golden cross. Next up, let's have a look at the most talked market, crude oil. WTI plunged below $100 after reports of some major progress in U.S.-Iran negotiations helped sharply reduce the geopolitical risk premium that is tied to oil because of the Strait of Hormuz. Markets are also now focused on whether both sides can finalize a ceasefire memorandum within the next 48 hours. Despite the sharp sell-off, fundamentals remain quite supportive with ongoing inventory declines and tight global supply. Technically, WTI still holds a medium-term upward structure, although momentum has weakened quite a bit. Resistance stands at $100, followed by 105 and 107.35, while support sits at the psychological level of $90. Next up, let's have a look at gold. Gold has climbed back towards $4,700 for a second straight session as easing Middle East tensions pushed oil prices lower and reduced inflation fears. Markets are also now reassessing expectations for central bank policy as the conflict cools down. Technically, gold rebounded strongly from the $4,500 area and reclaimed the $4,600 psychological level. Resistance now comes in near the 20-day simple moving average at 46.99 and then 47.53. Support is seen around the psychological level of $4,600. Momentum indicators are improving with RSI near 50 and MACD turning more constructive. Lastly, let's have a look at the Australian dollar, which surged above 72.50 to fresh four-year highs after the RBA delivered its expected 25 basis points rate hike to 4.35%, while improving global risk sentiment added further support to the Aussie. The pair continues to hold a strong bullish structure above its major moving averages, with RSI near 63, showing positive but not really overextended momentum. Immediate resistance is seen at 72.70 and 73 cents, while support sits around the psychological level of 71 cents. That's all for today's morning market outlook. As always, manage your risk and happy trading.